What's up? What's up? Good afternoon. Welcome everybody. What's up, Michelangelo? All right, let's get to it. So we've got a short week this week. Yesterday was a US bank holiday. We had Labor Day, so no stream. But things are looking decent this morning. We started off the week in a range, same range as last week, and we've had a breakout here through London session. So things are looking pretty good coming into New York today. What's up, Corpse? Now, let's start off with a higher time frame breakdown. I actually thought of doing a weekly outlook for YouTube for the channel. I just didn't get around to doing it. But let me know what you guys think of that. If that's something you would like to see, you can leave a like on today's stream and just let me know if that's something you'd like to see, those weekly outlooks. Maybe I'll start posting them on Monday morning or Sunday evening. So overall, we're also starting a new month. Friday was the 1st of September, so we may as well do a fresh breakdown for the month. Now, I'm actually going to start out here on the quarterly time frame. Now, that's not a time frame that us as day traders really look at too much or ever, but when I was looking at the monthly, these monthly candles are just printing side by side, so it's not giving you too much information to work with there. So what I thought to do is, okay, obviously scaling in is going to be helpful as well, but the weekly here is also not telling you too much. So let's zoom out even more and get a macro perspective of what's going on. So of course, completely zoomed out, gold as a whole, as an asset, is more bullish historically, and we can see that through 2019, 2020, you had quite a strong rally on gold. And then the last couple of years, we've had a lot going on. we pushed up to new highs with COVID in and around 2070. So keep in mind, first time we came into that 2070 price point, we had a fundamental catalyst, we had fear, uncertainty, and doubt in the market driving that demand into gold, pushing us into those all-time highs. The next time we tapped into those highs was with Russia, Ukraine, also bringing fear, uncertainty, and doubt to the markets. The next time we've tapped into this level was the banking crisis, which was relatively short-lived. Now, from a macro perspective, we are in uncertain times. There's still a level of uncertainty. We've seen some negative US data as of late, although last week's NFP was giving us some good signs, and we're seeing a stronger dollar this week. So overall, each time we come into these highs, you can see that we have massive pullbacks here of hundreds and thousands of pips. So, this is essentially a range, and you're still in this range right here. This last quarterly candle is more of a rejection candle. Obviously, we pushed into these highs and failed to break up any higher. Closing bearish, almost like a fake out here of 1940, let's call it. So going based off the quarterly, like I say, that looks more like a rejection candle, and we understand we don't have enough of a catalyst to be breaking these all-time highs. Right now, not enough demand in gold to really be holding above the 2000s. Now we go back to the monthly. So like I say, the issue with the monthly is these candles are essentially printing side by side, and we are pretty much ranging between 1980 and let's just call it 1900. So the last few days of last month, we had quite a strong move as we broke back above 1900, and that left you with quite a strong wick to the downside there. So, this candle, even though closing bearish, is not telling you too much. It's quite an indecisive candle, closing bearish, but with a strong wick to the downside. When you've got strong wicks to the downside like that, that's obviously showing you rejections. So this is just showing us the uncertainty within this range. But we did still close bearish. And like I say, if we're looking at the quarterly candle there, we're coming into the last month of the quarter. Our previous quarter was bearish. What are the probabilities that we get a wick fill on this new month? We fill last month's wick, and we come back down into the 1900s. To me, that's what makes a lot of sense. But now your weekly is tricky. We've had two very strong bullish weekly candles here on gold. And, if you were just looking at the monthly and the weekly, you may get taken away with the idea of those buys. Now, what I identified here, which I don't often use trend lines, and when I do, I use them sparingly and understand that they are subjective. Trend lines are not always going to be the most accurate, but in this case, it's just adding some confluence here. And what we can see is from these highs, we revisited this trend line in July, and then we are tapping into that level again. And that level kind of ties in with a very significant level here at 1950. So, like I say, based off the weekly, we are more bullish there. But just understanding the structure still, to me, this looks like we are still more bearish. Okay, we're coming off of those all-time highs. We created new lows last month. Yes, we've had a pullback, potentially setting up for our new month to continue moving bearish. If we look at this price action from last year, we've got similar ideas here moving into those all-time highs, and then you slowly start to trend back bearish. Now this drop was a little bit more aggressive, but overall, you started to form that bearish structure coming off of those highs. We don't have the same drivers in the market right now, because last year what was driving that bearish trend was the Fed raising rates. Now rates are still up. There's still a possibility that they raise rates higher, but for the most part, it's priced in, and it's not a shock to the market. So what you're seeing is a much slower moving market here. We can see a lot of this price action. If we scale into a 4-hour, you'll see a lot of the price action over the last 6 months or so has been very choppy. So we are just slowly trending to the downside here. And then having a look at the dollar DXY, what we can see is, from a macro perspective here, we had a breakout of this 102 level. Strong move up here, like I say, with the Fed raising rates, bringing strength to the dollar. That's when we saw that bearish trend on gold. And then you had quite an aggressive pullback here to end off last year. But we have retested this 102 level. And, 102, 101, very significant area. Overall, you're just ranging here until we start to break above 105. But we can see that this bullish momentum is starting to come back into the picture on the dollar. Most probably not going to be as aggressive as last year, but we could easily see price coming up to revisit these highs up here over the next few months. You get the idea. So with gold still being at those highs, those all-time highs, coming off those all-time highs, I'm not really shifting into a bullish bias just yet, until we start to break above 1980. Obviously that's from a higher time frame perspective. On a day-to-day basis, in sessions, I can easily be adapting to either direction depending on the volume in your session. But like I say, based off your weekly here, these candles look relatively bullish, and you do look like you have range to move up to 1970, let's call it. But I don't want to get too taken away with those buy ideas when we start to develop that entire image, that entire market image. Like I say, overall dollar is very strong right now. You don't have all that much fear in the market. We did have some negative data for the dollar over the last couple of weeks, and that led to a bit of a pullback here on gold, putting a bit more demand into gold as a safe haven. But we can see that we are definitely finding resistance here at 1950. Now just starting to scale in based on the daily. We got this bearish candle closure after we tapped 1945. There was someone in the chat some time ago who said pullbacks to 1945. I think that's when we were still sitting down here at like 1900. And I had also looked at basically this range right here. And this was a very interesting area to me, this structure that hadn't really been given a proper retest, and it looks like that idea is playing out. So you're just basically retesting this previous range right here. But yeah, overall we can see on the daily there, you've had strong rejections. You can identify that by these wicks to the upside, bearish candle closures on the daily, and we're starting to break some of those previous daily lows. breaking below 1935, which is quite a significant level there, and then looking to start correcting some of this move today. So, you know, that 1935 level hasn't really been retested yet. So what I would really like to see in this session is a pullback to this level, resistance being formed, signs of rejection, and then looking for the continuation here. Now we'll see as we begin to pull back that price would have formed a low. Let's just say that's our low. Then, you know, that's your initial target. So once you get that pullback, let's say you're taking the trades off 1935, you'll be looking to target these lows that have been formed earlier in the session as, you know, probably your TP1, and then looking to possibly have runners down here to 1925, this previous structure, and possibly runners to correct this entire move based off some of those factors we've identified overall, with gold being more bearish, with the dollar being extremely strong. So I didn't really touch on this too much, but we had this level at 104 on the dollar, which is extremely strong. You can see how we held that level for some time. When we tapped into it in August, we had quite a deep pullback, and we've moved into that level again, breaking above. Lots of momentum to the upside here as a result of some negative news for the euro as well as China. So just leading to more confidence in the dollar as a whole, which the dollar is the world reserve currency, and as they keep their rates higher, you know, that's why we have been seeing more demand in the dollar from a macro perspective. So now we're seeing that really kick into play. So yeah, ideally need to see some sort of pullback here. We're moving down very nicely, but I don't want to get too aggressive. We had a 30-minute candle closing below 1930. So if we go to the 15-minute, you know, you can see that you would have had support here at 1930 or 1930. You know, so we've closed below that level. As you break that candle low, you may begin to push down to 1925 here, but the risk to reward is not that great, one. And you know, we've had quite a strong move down already. I think waiting for that pullback is going to pay dividends. So I'm going to be patient here. It's essentially a Monday, at least for me. No trades yesterday, took the day off. So gonna take it slow. You know, we do have volume, we've got nice movement, clear direction, but waiting for that pullback is going to be crucial. Even if that means waiting for the new 4-hour, waiting for NYSE, you know, that's the time where you may get that pullback, or coming into the 4-hour close. 4-hour might make a nasty top wick considering previous 4 hours. Yeah, I agree with that. I think that's possibly going to be the case. Might even start to pull back in the last 30 minutes of this 4-hour, leave a bottom wick. New 4-hour opens up, maybe gives you a tap into 1935, flips, and then we fill the wick. So let me get Zoom annotate out and I'll draw this for you guys. Okay, so this candle here, if we, like I say, start to pull back in the last 30 minutes here, leave a bottom wick. So your 4-hour candle will look something like that. New 4-hour opens up, gives you that retest of 35. And then as it flips, you would be looking for the wick fill of that previous 4-hour and breaks of the previous 4-hour low to continue down here to 25. And then if we're scaling into the 5-minute, for instance, it should be pretty easy to identify rejections there from 1935. And we could look at something like that. For bars here today, I'm not really too on board with bars. I don't see any reason to be taking bars unless this 4-hour candle does something crazy in the last 30 minutes here and flips back bullish, closes above 35. Because then you're leaving quite a strong rejection to the downside. And of course, closing back in that range, then we could, potentially see moves back up to 1950. So if this candle came back and closed bullish above 1935, strong rejection to the downside, then new 4-hour wicks down into 35, let's say, or even 30, and then possibly moves up to 45 or 50. I don't see it right now, so just waiting to see what price action is going to tell us here. We see London levels getting retested and trend continuation. Exactly. That's what I love to see. That's pretty much my A plus setup, I would say. Now in New York session, what I really like to see and what I enjoy about New York is you can use the data from earlier in the day. So London session generally going to give you a range, and then if you can get a breakout of that range pre-New York or even New York open, and then a pullback on the new 4-hour or coming into the 4-hour close before NYC, a retest of that London range, that's a really beautiful setup we see very often. So this was the range for London or pre-London, let's say. Yeah, pretty much. So you could even pull up a little bit higher, tapping like 1936. Sometimes New York can give you very deep pullbacks, and we can even come and retest the highs of this range or get a fake out to the upside here. So something like this, retest 1940 even. It's something that could happen. On the 4-hour 1937.5, also quite an interesting level. Quite a deep pullback. But anything's possible. What's up, Ned? Oh, good. Days after holidays always look exciting. Yeah, today does look good. Yeah, let's wait and see. You may even get that move all the way into 25 in the last 15 minutes of the new 4 hour. If we do move into 25, you know, before the 4 hour closes, seeing that pullback all the way to 1935 becomes pretty tough. You know, because to sit through a 100 pip pullback, it's probably going to take some time. So I don't really want to see us pulling all the way into 25 now. 25, you could also get some pretty solid rejections. If we do move into 25, I could even be open to some buys off of that level, anticipating that move back up. Because this was a pretty impulsive move down. Like I say, no real retest of that structure from London session. And there's quite a high probability that we do get that retest of 1935. Here we go. Quite volatile in the last couple minutes of this 15 minute. Wow. What's going on, chat? Was there news? Did I miss something? Okay, I think with that kind of move, let me just check Twitter quick and see if something's going on. But, you know, New York session can do these sort of things. It's like 50 pips in 2 minutes. Fed. Fed Waller is speaking now. He's not listed here on Forex Factory. Forex Factory is sleeping. Moor. So Fed Waller says, the data doesn't say we need to do anything imminent. Job market is starting to soften, so that doesn't sound good. The recent data gives the Fed space before making the next rate decision, so really just throwing more uncertainty into the mix. Because the Fed's not really giving us clear answers on what they want to do next. They don't have to do anything in a rush. You know, their rate hikes are doing their job, so they don't need to necessarily raise in a rush. But cutting would probably be a bad idea, so we just want to, as traders, get an idea of what the Fed will do next. So that's why we look at specific data and then relate it to how the Fed may react. So, you know, that NFP last week was positive, and as we saw now, this headline that I just read, recent data gives the Fed more space to make a decision basically. The data is looking good for a soft landing scenario. Yeah, that should bring strength to the dollar. It's not surprising that unemployment rate has ticked up. Pretty much expected. If inflation keeps coming down, the economy is in pretty good condition. Recent data will allow the Fed to proceed carefully. We'll see. So just a bit of volatility. Hopefully, when he's done speaking, things should clear up. So NYSE or new 4-hour candle should give you some really nice movement here. What is today? The 5th. Hey boys, SA GDP is up. This Fed speaker isn't listed anywhere, but I'm seeing headlines from Twitter that he's speaking now. And we can definitely see that impacting the market. Otherwise, chat, how's everybody doing? You guys ready for a killer week? Did anybody hold the sells from NFP? Fuck, man. It was a bit of a frustrating day for me. But overall, not too bad. I know some guys held it, but let me know there in the chat. Anybody in any trades so far? Anyone take gold sells this morning? Got 100 pips on NFP. Lovely, lovely. %3 in the bag already, Ned. Sheesh. Creaming it. Yeah, Cope's on right, bro. A little bit sick. Oh, I think I'm getting sick. Three lots. Nice. Did you secure some Hactorino? I'm sure you can add to that shortly. Yeah, let the market settle a bit. Wait for this 4-hour to close. No trades for Uncle Corpse. Until inflation comes down, the Fed will have to keep rates up. So that is quite a hawkish statement. It's clear to see that monetary policy lags shorter. I'm not too sure what that means, but we are seeing some of those lag effects with that negative data, meaning when they raise interest rates, it has a negative impact on the economy, but it doesn't kick in immediately. So we call it a lag effect, right? So we're starting to see some of those lag effects come into place. With the higher interest rates, last week, we saw some negative data there for the dollar. I think NFP was like the only thing that was really good, and it was still actually not really great numbers. It was just better than forecast. Oh, this ISM was good as well. I was off the chart by then, so I didn't see that, but that's good. But you can see unemployment rate is up. Average hourly earnings is down. NFP, yeah, good. Okay, anyway. It's nice if we tap. I'm not too sure what you mean, R4. It's nice if got 1935 and push down. Yeah, if we tap 1935 and reject, that'll look pretty good. Chug a bottle of Still Pain, you'll be good. No, that doesn't sound good. Sounds like addiction. I need more data to say whether the Fed is done raising rates. This is still Fed Waller speaking. So like I say, their rate hikes are doing their job. They don't need to be in a rush. They don't need to do anything to shock the market. Because if the Fed came out and said anything along the lines of we are definitely raising rates at the next meeting, they would never say it that directly, but let's just say that was the message. We are raising rates at the next meeting. You would see good strength in the dollar. Probably some bearish movement on gold. But I mean, this is just one of the Fed speakers. There's a couple Fed speakers this week to keep an eye out for. And you can see why just being aware of these Fed speakers is quite important. I mean, you know, since this guy started speaking, we've pulled back nearly 70 pips. And, you know, like I said just now, we closed below 1930. And as you break that previous bearish candle low, maybe you're looking for the sells right there, but it's probably going to be safest to wait. And I didn't even know there was this Fed speaker. It's just the risk to reward is terrible. And based off the price action, it made sense to wait for a pullback. Although, look at the 4 hour. 4 hour is tough. I still think even if you close like this on the 4 hour, if we reject 1935 on the lower time frames, you could get a pullback into 1930. Even if price is wanting to move up later in the session, these sell ideas might still play out before you see that move up. I think I would need to see breaks above this range for the bars. I'm not seeing anything in commercial estate that will threaten the economy. You know, that sounds good. So, I mean, And what I'm seeing from this car, I don't think it's going to bring too much strength to gold. I think the sells are still looking good. You know, we'll just follow the price action of the new 4 hour. We've at least sat through this noise now. So NYC might be the play today. What kind animal no 100 pip stop and 20 pip TPs today? Look, you're the animal. Oh shit. Okay, so oh, I didn't realize Lurk was Afrikaans. I thought that was like a spelling error. Shit. What kind? Almal, okay. So, my bad. Fuck. Oh shit. So you basically tapped 35 here. Just shy of 35. Already seeing some reaction there. You got 2 minutes for the 4 hour candle to close. That new 4 hour could easily give you a tap into 35 before then coming down to fill this wick. Your hour candle here is closing quite strong bullish, but we can see that this structure is more bearish, and if we're holding below 1935, those sells to me are still looking good. Where are you from, look? I think you caught on the other day what was cutting in that chat. There were a lot of South Africans in there. Oh, it was such a rave. It, you know, if I do take anything in the next, like on the open of the 4 hour, I will at least wait for like a 5 minute to give us a confirmation. So just give me 2 minutes, guys. What school did you via to? Oh, shit. Okay, look, we'll see. We'll see. Oh, you're on the Discord. You went to St. Charles, it's not possible. Never even heard of St. Charles. So I would like to see us tap 1935, even 1936 here, just to start the new 4 hour and see how we react to that level. You know, if we breaking this previous hourly high, since this candle was so bullish, you know, if we break that high, there is a possibility that with volume, if there's enough volume to the upside, that you just continue to push. So if we can break that high first and then tap 35, tap 36 or 35.8, let's call it, you know, and see rejections there, see that, okay, even though we broke this previous strong bullish candle high and not getting that move up, it's also just extra confluence there for the sells. You may not get that tap into 35. You know, this essentially to me was a rejection of that area already. So definitely showing signs of rejection here. You know, this 5 minute pushed up quite strong, rejected, closed with quite a weak body, strong wick to the upside. Next 5 minute closed a weak candle as well. Then we started to form resistance. One minute looks pretty ugly. 15, you know, if your 15-minute candle here closes bearish, that's going to be also just a very nice confirmation there for the sells. You can see this 1 minute price action, how we're just ranging, kind of formed a minor support right here. You know, if you start to break below that area, we can start to see that move down. So I was thinking to just rather wait for this 5 minute to close. Because if we're closing strong bearish on this 5 minute, that's a nice, decent confirmation. What's up, Chris? Your 1 minute looks like it'll give you the push. Let's wait and see how this 5 minute closes. 1 minute left. What's up, DC? How you doing, bro? Okay, 5 minute candle close nice and strong there, giving us, you know, confirmation that this is resistance being formed here. Just for me, break of the lows, I would like my stop above 1935, and that's a pretty big stop. Risk to reward is actually just about not worth it. Got 5 minutes here for the new 15. So waiting for that 15-minute candle to close is also just going to give you nice confirmations there. And new 15-minute could wick up and even give you that tap into 35 still. So I'm going to be patient here and wait for the 15-minute candle close. You know, I really like the 5 minute for more aggressive entries, but this wasn't the clearest situation. We didn't really tap the level I wanted to tap. So I think waiting for the 15 to close, give us a bit of extra confirmation, then I can possibly try something slightly more aggressive. You know, if we do start to break that previous 5 minute low, you may even just get that push and begin to fill that previous 4-hour wick. And that was the idea that, you know, we had planned out here. But if you don't get confirmations, you don't get confirmations. My only real entry idea here was maybe this 1 minute closing below that support, that minor support. But like I say, 1 minute, I don't really want to be scaling into 1 minute too often if there's not you know, something really convincing. But that's pretty much my trade idea. So tough. Cheers, Nico. Off already. Man probably got the cells and he's bouncing. Money made, but easy. Take your money and go. 3.56. Just this. Buy this man. Nah, nice. Nice trade. What's quite interesting is our previous 4-hour closed bullish, you know, with quite a strong rejection down to 30. We filled this wick so quickly. And, you know, the previous hour was still quite a strong bullish candle. I'm not doing away with the sell ideas, but just need to be careful in this area here, 1930. Because you could possibly, you know, find support here and see us actually move up in line with that previous 4-hour. But so far we do have a lot of momentum to the downside. I don't really want to trade against that. It's just unfortunate that I missed the idea here with the pullback. Alright, 15-minute candle. Nice and bearish there, but closing right at 1930. You got the shoulder of the head. Easy. Away no the maino. So this is still an area here to look for those sells. You know, we didn't quite get the tap of 35. With this 30-minute candle closing in 13 minutes, if you are closing bearish like this, you know, we could still get quite a steep top wick at NYC to tap that 35 level and then look for slightly more aggressive entries there now that we got the 30-minute confirmation. So something like that at NYC. I think with 15 minutes to go or 12 minutes to go until NYSE, you know, it's unlikely we have the volume to break these 4-hour lows and push all the way to 25 now. So waiting to see what NYSE will do, waiting to see if we get another pullback to 35 here, you know, it's probably going to be the best idea. Found the best prop firm. What is it, Ned? J Money style. Jeez. I used to follow that guy on Instagram. It's crazy. He's a killer, but it's wild. You know, normally when you look at someone's trades, you can get an idea of, okay, what this guy's approach is. I've never really completely understood what his approach is. Just from looking at his trades, it's like, I don't know. It's crazy though. He's definitely a killer. Bought a new Rory on Sunday. Beast mode robot, 8,000 rand. Jeez. The 5 is. Are you serious, Ned? I ripped these guys the window on the stream saying they were scammers. Oh shit. I just saw they didn't have they had very small drawdown, you know, and I think it's just very unforgiving. But I mean, they don't look too bad. I see they hosted a stream on YouTube over the weekend, addressing this My Forex Fund situation, and their CEO or whatever, you know, he was answering some questions, and all you hear is um. I'm like, oh fuck, this doesn't sound good. So I don't know, Ned. But I mean, they've been around for a while. Okay, so interesting. Here you've had a tap into 1930, forming a bit of a support. You know, we may see that push back up to 1935. Now, you know, just going based off price action, I think we have quite a high probability to still come up to 1935. The way we're rejecting 1930 there. I was actually thinking of possibly even taking some counter trend bars coming into NYC to get that move up. It's quite a risky idea. But I'm gonna give it a shot. Gonna go half risk here. I know it's completely against everything that I've been looking at this morning or this afternoon. That's why I'm going half risk. So I'll have my stop loss below 1930. Let's call it 1929. $28 pip stop, half risk, essentially like 14 pips, you know. And then the idea is to get that push to 1935, but also understanding that the previous hour and 4 hour were bullish, and that there is a probability with that situation to get a move to the upside. So as we reject 1930 here, you know, we can, if we look to possibly target levels like 1940, you can get quite a good risk to reward still. And if we do come up, break the previous hourly high and just blast off here to 1940, you know, those sell ideas are gone. So I'm just following the price action and giving these bars a shot. But it is counter trend, half risk. So just understand that. Don't be silly. You know, also our weekly candle is bullish. We did discuss that. I mean, 4 hour had quite a strong rejection of 1930. And like I say, it's just a little bit fishy that we filled that wick on the 4 hour, like in the first few minutes, you know. We've got 5 minutes until NYC. For these bars, I'm going to look to have runners to, you know, this range we were in from Thursday, Friday. The highs of this range, let's call it 1950. So going to look to have runners to 1950 on this position. You know, some people might think, hey, this guy's been looking for the sells the whole day and now he's taking the bars. But this is just being adaptive, understanding price action, being adaptive. You know, like I say, I've gone half risk on this idea because it is counter trend from this morning. And it's not really the idea that I initially had planned out, but I did discuss if we had rejections of 1925, let's say, that I would be open to the buys. But the way the 4 hour closed, rejecting 1930, coming back into 1930 now, seeing those rejections, like I say, just following the price action, to me, seems like it's worth it to give it a shot. 1935, need to be very careful there. Because if we do see rejections of 1935, I'm all on board for the sells. So, you know, I don't want to get taken away with the bars if we see the sells starting to set up. So as we move into 35, I'll secure 50% and go break even. Let's say TP1 and Another issue is, we might not tap 35, but this is a resistance here at 33, 34 on the 15 minute. So just be careful there. That's looking like a bit of a rejection on the 1 minute. Got 2 minutes until NYC. $19.40 here will be my TP2. If we can get above $19.30, I'm looking for us to move up to if we can get above $19.35, I'm looking for us to push up into $19.40. Cheers, Corpse. I agree with the bars. Thank you. I mean, most people would come in and say, normally people only really want to voice their opinion when they disagree with you. But yeah, I think there is reason to be looking at bars, like I say, based off of what we've been seeing over the weeks, the weekly candles. That 4 hour looking more like a rejection. Very strong bullish candle on the hour. But yeah, I mean, I was initially looking for the sells, so I'm still very much open to the sells. But I wanted that tap into 1935. And the way we rejected 1930, it's giving me an opportunity to get involved here for that push up to 1935, secure some, and then if we do break above 35, based on the 4 hour and the hour, you have potential to continue pushing here. Not the greatest closure on the 5 minute. 15 seconds to go. So I still closed bullish on that 5, but a pretty nasty wick to the upside. Your 15 did form support here off 1930, and your 30 minutes closed bearish, but with a very strong wick rejection off 1930. So if anything, it looks more like a rejection candle from the downside. So I'm not going to manage this position in a rush. Like I say, I'm just in here with half risk. I'd like to see what this first 5 minutes of NYC does. So sitting back at entries now, if you want to manage risk, it's a good idea to do so now. If I weren't in the bars and I was still stuck on the sell idea, not stuck on the sell idea, but looking for those sells, this still wouldn't really be enough for me to get involved in the sells. I would still need more confirmation here for sells. So, just looking at it from that perspective, I'm happy to let these bars do their thing for now. If this 5 minute closes a bearish engulfing candle, then I will manage my position. So if this 5 minute candle closes below 1932.3, you know, at that point I will close out some of my position. Because if we're closing bearish on that first five of NYC, that next candle with the NYC volume can easily push you down to 1930. The idea here was to push up to 1935 at least. So I'd like to see us closing bullish on this candle, on this 5 minute. Overall looks pretty decent. Just got a nice little bottom wick there at NYC. Yeah, your 5 minute is looking pretty nasty here. Let's see. Yeah, that 5 minute didn't really give me the close I want, but we had a bit of a rejection there in the last minute, formed the support on the 1 minute. So if we break that previous 5 minute low, I will manage my position. So definitely closed, basically telling me that I should maybe manage risk, but like I say, just scaling down to the 1 minute there. I'm gonna give it a chance here. As we can see, you know, that rejection of 1930 is holding strong. Diamonds, baby. Let's fucking go. So, I mean, we closed bearish on the previous 5, but we're now breaking those highs. Looks like we're moving into the previous 15-minute highs as well. Keep in mind your previous 15 closed bullish, so somewhat of a support. But this, I want to say if we break the previous 15-minute high, we could get a push. But this is a tricky area on the 15-minute. You know, this is resistance. But let's be patient here. Yeah, with this candle now, if we close bullish on this 5, then I would expect that push up to 35 on the new candle, the new 5 minute. If we flip bearish on this candle, this 5 minute candle, then what I would do is I will close out some of my position here. Not liking this. So yeah, at entries, I'm going to close out 60%. And that's just to manage risk. You know, we're not really getting that push I want to see. And then if we break that previous 5-minute low, I will close full. So essentially just going to move the stop loss in here to, let's call it 1931.1. Okay, so your 5-minute is closing bullish there, but just pretty choppy. Yeah, I think if we, there we go. I'm going to actually look to close full here at entries. Yeah, I'm gonna close full. So basically break even. So you're just ranging right now. You know, the initial idea here was for sales today. Wanted to see a pullback into 35 for those sales. Came just shy of 35, saw a rejection, and then, you know, now we're just ranging between 35 and 30 basically. So just gonna be patient here. Reason I got out of those bars was we formed a resistance here, right? And we could see that this 5 minute gave a little bit of a rejection there. We closed bearish, and then your next 5 moved back up into that level. So this is your new 30-minute candle, new 15-minute, failing to break the previous 15-minute high, and then ended up closing quite a weak bullish candle. Now if you break below this support basically on the 5 minute with NYC volume, we could see that strong bullish continuation now with the NYC volume. You know, at the same time, this is a minor support. You could get the move up with the NYC volume, but I'm not convinced. It's just too choppy. You know, look at the 1 minute. It's not really giving you a clean move. So this is just a range. You know, safest moves are going to be above 1935, or if we reject 1935, then, you know, possibly more aggressive sells, or below 1930. Like I say, that idea here that this is a support being formed, and then if we break that support with NYC volume, you could anticipate the rest of that 4-hour wick fill, and we had those ideas for sales earlier on. So it's something I don't mind giving a shot here. Looks like we'll close bearish on this 5 minute. Strong rejections there. It's tough with 1930 right here. But if we're looking to target previous 4-hour lows, you've got about 34 pips of range moving down. Stop loss would be about 30 pips. $15-minute candle's about to close. Yeah. Might pay to wait for just entered souls. Good stuff, Benny. Yeah, I'm gonna wait for the 15-minute close. So there you go. Pushing up, pushing up. Okay, cool. So if we break the previous 15-minute low, I'm going to get involved in these sells. Like I say, stop loss is about 30 pips there. Yeah, so pushing up here, you know, we'll see what happens at this zone as we tap into this 1933.8. See if we get a strong rejection there. But if we break above this zone, yeah, then I'm going to put these sell orders on hold. Although there we go, it looks pretty good. Nice rejection. So yeah, same idea applies here. If we break below this wick right here, I'm going to get involved in these sells. So we got a nice top wick on the 15. Previous 15 closed bearish. Previous 30 closed bearish. I'm happy to give this a shot. Okay, so I'm in here on the break of these lows. Stop loss is above these highs at, let's call it 1933.5. Uh, 1934.5, excuse me. Stop loss at 1934.5. $19.17, let's call it 1917.5 will be my final target for these sells. Looking to correct this move from Tuesday last week. I'm gonna make it pretty for you guys. Text, this will be runner TP. You have this structure here to the left on the hour at 1925.5, let's call it, so that can be TP1. Look, is the stop loss big enough for you? Should we invert it? Still got the TP1 and break even from the bars there. It was worth it to give the bars a shot, but we could see that lack of volume to the upside. Yeah, managed that very aggressively, went in with low risk, just because it was counter trend and it was against the initial idea that I had planned out. But you could see the patience and discipline to execute that, and then the management, you know, not messing around, not giving it a chance to come against me, rather just taking a break even. So still got some bullets to play with here. And we're looking good. Looking real nice here. You do have this support around 19, depends what time frame you want to draw it up on. But on the 30-minute, we're moving into the support now at 1929. You know, that is a level to be careful of. I want to see us breaking this previous 4-hour low. Once we break that low, I'll be pretty confident to hold here down to 1925.5. But I need to just monitor the price action in this area. That 5-minute looked beautiful just now. That previous 5 looked really good. You know, if this hour can close below 1930, we should be styling on the new hour. I'm in US 30 sells. Lovely Mateo. Mr. US 30. Hey. One to 4 RR for the gang. Not bad. Okay, coming into the previous 4-hour lows, we need to see us break these lows. This is where I want to be extremely cautious on and even scaling into a 1 minute to see how we react here. Because if we do see some sort of rejection, I don't mind closing 50%, but there we go, nice breakthrough with volume. We should get that push, or not should, but we have a high probability of getting that push to 25.5. Okay, 1 minute closed below those previous lows, so can the next one give you a push? If it doesn't, like I say, then we need to just be very careful. And what I mean by that is just secure some partials here. So I've got my finger on the trigger to close out partials, but right now I'm still holding a full position. This is also the 5 minute. Your 5 minute closed below those lows, so we are getting a little bit of a pullback. I mean, your previous 5 minute was a very strong bearish candle, so you know what, we can bring the stop loss into entries here. So risk-free trade, we've broken the daily lows, no need to risk any more than that. So risk-free trade, stop loss is at entry. And let's see, if we break that previous 5 minute low, I'm expecting that push to come in, push to 25.5, and I'll secure 50%. Excuse me, I'll actually secure a little bit more than 50%. I'll secure about 60% of my position. Maybe even a bit more, like 75%. So last couple minutes of the hour as well. Patience, well done. Thanks, Nico. Thank you, thank you. Come on, baby. Okay. Okay, breaking the previous 5-minute low. If you have a look there, looks good for that little push to 25. TP1 incoming. Last couple of minutes of the hour candle. So, you know, if we're not getting that push to 25 now in these next couple of minutes, I'm going to just secure 60% right here. Yeah, I'm going to do it. I'm going to secure partials here. Okay. So about 42 pips. And stop losses at entry. So beautiful trade, beautiful way to start the week. And I'm just going to let this run. Guys, I really need the bathroom. Drink so much water, man. Thank you, Gold, for letting me go to the toilet. Guys, I'll be back now. In terms of management, like I say, coming into the last couple minutes of the hour, look at closing some of your positions as you can get pullbacks. And, you know, in New York session, it's not unlike gold to give you crazy wicks on the beginning of a new hour. You know, I wouldn't be surprised if we got pullbacks here, got taken out, and then continued in that direction. So rather, you know, take a little bit of your profit off the table there. You know, we do look good to move down into 25 here on the new hour. This current hourly is going to close very strong bearish below 1930, but that top wick is always a possibility. So manage accordingly, but overall stop loss should be at entry here. There should be no more risk on the table other than the profit that you have running. Or at least personally, that's how I'm managing my position. Give me 2 minutes, guys. I'll be back now. Yeah. Looking good, looking good. Let's see here. Okay, lovely guys, I think that's going to be my day. I've secured the majority of my position here. It was at about 42 pips, right? So before that new hour candle opened up, you did get a bit of a push here. Not quite to that TP1, but you know, essentially when I closed out partials here, that would have been my TP1 situation. And then you know, at this point I'm looking to hold what I've got left to some of these higher time frame targets to fill this move here to the left down to about 1917.5, possibly even 1915, but my target is 17.5 on the 4-hour time frame. That is quite a significant support. 1915 more significant of a level for sure. You got a lot of reactions at 1915, but yeah, I'm just looking at this candle here to be corrected. So I'm looking for that move down to 1917.5. That'll be my final TP. There are levels to be careful of here. 1925, we're coming into that level now. That would have been TP1. And then 1922.5, also just a little bit of a tricky area. You had some rejections here to the left. You can see these rejections, also price respecting that level right there. So be careful of that level as well. 1920, also just a psychological level. Also just, you can see some rejections in that area. You know, don't be greedy anticipating that we'll fill this entire move. You know, I think it is a pretty high probability idea, but you know, are we going to have the volume? I'm not too sure. Would be nice, but yeah, you know, if markets coming into some of these levels and I'm seeing rejections, or I'm seeing rejection candles on the hour time frame, I'm seeing an hourly support forming of 1920, we're 20 pips from that final target, you know, I'm just going to secure full. So I've set alerts at some of these levels that I'm keeping an eye out for. We may even reject 25 here and that runner gets stopped out at break even. I'm pretty happy with what I've secured already. I'm going to call it a day right here. Fed Waller had to finesse me. That guy bought some heat there. But yeah, overall, guys, I'll keep you updated on the Discord. Thank you for joining today. It's going to be a fire week. Yeah, Discord link is in the video description if you're new here today. You want trade updates. You want the link for the live stream or upcoming videos, because I will do upcoming videos. And I discussed earlier on weekly breakdowns, weekly outlooks, which I'll start to put out on the YouTube as well. So if you want updates on all of those, and to get in touch with the community chat, the Discord link is in the video description. I'll send through the updates for this trade through there, but no need to really sit here any longer. You know, I think that's that's good enough for the day. See you tomorrow. Cheers, chat. Like the stream, guys. Listen to R41L. Wanted to mention, I had a look at these souls earlier to target 25.6, so this played out nicely tapping this area. Yeah, it was decent. Looked good to correct this move and retest that structure there at that level you mentioned. Yeah.